Towards the end of the day on Friday, we saw a sell-off in the afternoon, and we were aware of some things, and that's why I posted this video on Thursday saying, I'm pretty worried, and here's some reasons that I'm overall worried, and we're going to go through some of those as we get into some technical analysis today. We're going to be focusing on bigger time frames, so if you would like to focus on the shorter time frames with us later on, well, join us for our video tomorrow. Make sure you are subscribed, and thank you so much if you're here and you enjoyed the info from Thursday, because it turned out we needed to be ready to react, and that's something that we do on this channel. We like to trade like water, so yes, we are aware that we were trying to make the higher low, but we are aware of some signals going on in other areas that we're going to pay attention to, and we're going to show those off right now and see how those played out. So let's get into it. The first thing I wanted to point out was the dollar, and we were pointing out that the dollar was showing some interesting signals down here, right? The dollar was showing some potential for 4-hour divergence in the near term right here. We noticed that there was a 2-hour divergence right here, and so the dollar was going to be able to turn back around, and we were saying we want that to maybe even reject from the 5 and turn down if we want to remain overall like people are really going into assets and not going back into cash. But the problem here is you actually went above the 5 and continued to see upside for the dollar, which is something that we were pointing out. And the reason we were also looking into the dollar and something that was kind of a warning sign was the 10-year yield. So we do see the dollar rising here, so that makes total sense that we saw some downside towards the end of the day. And then we were talking about the 10-year yield, and the 10-year yield was overall trying to form some kind of base, like it could get some kind of reaction. And just pay attention to this, because we are not seeing this absolutely break out and see craziness. We'll see if that continues next week. And something that could affect this next week, if you aren't aware, is some data, right? So going into Monday, we'll get the PMI. Tuesday, you'll get JOLTS job openings, very important there. Jobs data is going to be very important. ISM services PMI on Wednesday, and then on Thursday, we will get initial jobless claims, but the big day is going to be Friday for the non-farm payrolls and the unemployment rate. So we'll have to see how all of these things play out and look into these signals very clearly. But these signals were telling us there were warning signs in the market. I mean, if you were looking at the housing sector intraday, that thing was dropping off, not even trying to make a new high on Friday, and that was a good warning sign as well. And then we looked at the 10-year yield with the reversals, but also paid attention to the other side of that, being TLT. High yield growth, yes, that did turn in the downward direction. We like to pay attention to TLT as well. You can see almost similar things from HYG, the high yield growth, compared to TLT right now. And we were just noticing that it had reversal signals here too. This was an actual little intraday trade that I actually ended up taking, because TLT, you can make good money. People were not expecting this to back off at all, aka they weren't expecting those yields to get any kind of reaction. And we just saw divergences, right? We saw divergences, we had a weekly expected move. And speaking about weekly expected moves, we are going to show off the monthly expected moves this morning for the SPY and the Qs, so you can get them on your charts. If you would like all of the monthly expected moves for stocks like TLT, all the stocks on the right side over here, the list goes on and on, the Mag 7 stocks, a lot of them there, and then some stocks like AMC and GME. If you want those monthly expected moves for February, this is the best time to join the Patreon, because you get it at the beginning of the month. You can start to make that plan for the beginning of the month, those scenarios, and then plan how you were going to react for the whole month, or what kind of trade you were even going to wait for, right? We can time out patience. So it is the best time to try out the Patreon. It's only going to cost you $7 if you want to give it a try. And if you don't think it helps you at all, hey, no hard feelings, right? No hard feelings. I just want you to be able to try it, because a lot of people have found it really, really helpful for their trading, and they haven't left, right? Most people that say, I'm a little skeptical, and then they end up joining for a month, they end up sticking around. But this was a big reason at this point. And we still are by the center line, right? These things can still curl up. So I was very quick to take profit on this trade, right? Taking something up here, just playing it to the downside move, mainly just playing it to these lows. Very nice little trade, because I'm looking for those little trades right now as things are getting pretty spicy, right? We've been in a spicy time for a while now, almost like what? Almost 2 months. And we will notice that in this area, we could see some interesting things, and we're going to talk about those more on Sunday. I want to get into them right now, but we're going to talk about how this thing could go up, how this thing could go down on Sunday, so you're prepared for the week ahead, and we will update you with new weekly expected moves in purple. But like I said, we were going to give you monthly expected moves, right? So monthly expected moves for the SPY, 625.49 to the upside, 578.15 to the downside. One of the other things we are noticing in relation to the SPY was the fact that the CPC, right? The CPC we were noticing just extremely low for a long time. And if that gets a reaction through and that can hold and then you react to the other side, you actually can see a pretty damn big dip in the market. So we'll pay attention to that going into next week as well. Just another reason that we made that video of, hey, I'm worried. People are really, really, really bullish all at the same time. You're hitting levels down here that you really don't hit very often, right? The last time we were at these levels was back when we were at the 2020 crash, right? Right before the 2020 crash was when people were that bullish. So we need to be paying attention to this because this could mean, hey, what are we going to do? Are we going to turn around? And that's what we're going to get into in the next part of this video, talking about the SPY on these daily charts. Let's look at them. We have not seen this crossover yet, so we still should be open to upside, but we should be also open to this being some kind of weird bottom at this point, right? Weird base at this point, because I didn't necessarily like the base that was forming, but we can notice that the daily chart is still curled up, so we can see these dips down without even crossing over this daily MACD, or we can unconfirm it. So we'll be paying attention to it. The main thing here, though, if this daily does cross down, we have to treat it very seriously. This is why we were paying attention to the dollar. This is why we were paying attention to the 10-year yield. You notice we hit the daily expected move and we sell off, right? We go right up to it, right? We're a few cents off of it, but that's where you know that the risk for the day is starting to get bigger than the potential positive reward. So the reason that this could be bad is you see this up here. We do have divergence now forming for the SPY, not confirmed at this moment. You do not have that necessarily confirmed with the MACD, but technically the price action is telling you down. The RSI is starting to kiss here, so you really only have one reason for this to fall down right now. We'd like to see a little follow through here, and then we would maybe target something like a weekly expected move, which we're going to give out tomorrow. So you have to be aware of these daily signals. Now, why could this get ugly really fast right away in February? Well, if this is going to get ugly really fast, I actually just made those monthly expected moves. We are seeing less implied volatility for many stocks across the board, including the SPY and the Qs. And one thing that you have to keep in mind is you have weekly divergence that has confirmed. You have confirmed that weekly divergence. We have, as of last week, seen a little bit of rejection, not necessarily rejection for the MACD, but a rejection for the RSI. We still have the opportunity to maybe see that little upside for a bit going into March. Remember, that was an important time we're paying attention to. But I just wanted to point out that we do have signals that have led to bigger corrections or even stock market crashes flashing red right here. And you do have the daily to go behind it, right? Why weren't we worried about this? Because we didn't have the daily divergence up in these areas, right? We noticed that that was slightly up on the RSI. We noticed that that was slightly up on the MACD. But now you have a big difference, because if you curl over now, you have made the new high, you have come above the previous price, and you do have those forms of divergence at this point. So you do have to treat this very seriously if the daily curls over. If we see reversal signals, we still will be reacting intraday to those signals, right? This is what really helped us on Friday, just pointing out the risk. So we had a plan and we were ready to react if things started to sell off. Very good job, guys. Now we're going to get into the Qs, and first of all, let's just get you monthly expected moves, right? 545.93 to the upside for the Qs, 498.65 to the downside for the Qs, a little bit less implied volatility for the Qs this month. So very interesting. Now, what could be taking place here? Well, one thing we want to be aware of is the crash signal, right? We do have that structure that is at major tops a lot of the time, where if this would cross down, this actually could be a bigger pull down than you think. Now, the reason that this could be a bigger pull down than you think is because during market tops, a lot of the time the SPY likes to go make a new high, but the Qs aren't able to, and they set up a lower high. And that is the possibility right here. We see how close we are to the center line. So you have to treat this. If we see selling on Monday, I would treat it very seriously. Doesn't mean I'm going to take a trade. Well, that depends on how those shorter time frames look. So make sure you're joining us for Sunday. But if this is able to cross down, that would be a bad sign. We notice that once again, the RSI is almost kissing down there. We don't see that confirmation on the MACD. We do see a solid confirmation on the price action here. But one thing to note about the Qs, overall, if you just look at these daily bars, you're going, okay, a low, a higher low, a higher high. Intraday bar, okay, a new low and a higher high, possibly a higher low. So is this necessarily like the most worrisome thing right now, in my opinion? No, I think you need a little bit more price action. And we're going to go into those shorter time frames to show you how, yes, it is likely for us to possibly head downward early on in the week, but we need to make sure no reversal signals are popping up there. And that's what's really helpful when we get up weekly expected moves. But I just really wanted to hammer it home. You do now. We didn't have it when we were dropping like this and doing all this. Remember what we were talking about? We were like, you don't have the daily structure, so we're not really scared. We think we're going to make that next upward move, and then we saw reversal signals and caught the next upward move. That's great. We talked about the risk up here, and then we said, hey, watch out if this tries to form itself as a lower high, because that might be a major topping signal for a correction or crash. Now you have that formation, so you have to be paying attention on Monday. If this just goes down and down and down and doesn't back off, you could start to see something crazy in the month of February. We will be paying attention to it. I'm not necessarily leaning towards it early on in February, but I'm aware that it could happen, and that was a pretty good sell-off on Friday. Something that really tipped us off was the DIA. The DIA really tipped me off about this. This is a trade I actually am in still. I have sold some runners I've sold most of the contracts, leaving some runners at this point because the value of this got so high fast, because I don't think people were expecting the DIA to drop off. But we're going to talk about in the shorter time frames why this was a good setup. So if you want to learn like what we talk about in the course, that's 90% off. It's 90% off just for this weekend. You have to get it this weekend if you want it for $100. If you literally try to get it on Tuesday, you're going to be paying $400. Okay, so I'm just doing this so you can understand. And then if you want to watch tomorrow's video where we're going to discuss this so you know a lot of what's in that course, well, then this would be a good time to subscribe to check that out and then maybe make a decision as it is ending this weekend. Something I just wanted to point out, though, was we never exceeded this high. We were always talking about the right shoulder that could have been. We never exceeded this high. To violate that, in my opinion, right? I don't like when it's violating the actual head of the right shoulder. And this is more of a right shoulder that could have been, right? We were talking about this being like this down at this time, but then we went through something bad. The reason I was paying attention to DIA was because it gave us a lot of warning signals, right? It gave us those warning signals, and then the SPY saw the big drop off right in this area. The SPY was overall moving sideways and then dropped. So this gave us a big hint, and this was getting excited. We're going to talk about that in the shorter time frames, but look at that tag of the weekly expected move and the little sell-off that came. It was very, very good. If the daily chart does cross down here, you would say, hey, this has potential to be a lower high, right? And we will be paying attention as well if this is some kind of retest to head higher, right? We pay attention to both sides on this channel. It has helped us so many times, but DIA was giving us some warning signs with some divergences and no 2-hour pullback that really told us, hey, there is some weakness here for the DIA. We thought that might be a rotation type of game with earnings, but turns out it ended up being a little bit bad for almost everything. And this is where you have to be paying attention to stocks like Apple and saying, hey, we hit the resistance zone and we immediately sell off. So this is kind of worrisome because it kind of reminds you of Nvidia. Weirdly enough, it reminds you of Nvidia. Now for Apple, I just wanted to say this still could go make that right shoulder that could have been. So we're going to go into the shorter time frames to talk about this kind of move that could happen that actually could lead to some positivity as we have seen the daily cross up. This right now is something to worry about. The sellers trying to take control here, really selling off. If that is going to continue, we will be paying attention. If this crosses back down, that means bad things. But if this is able to curl back up, we'll be talking about that in the shorter time frames. I do want to click over to Nvidia because that moment for Apple just kind of reminds me of this right here, where you see that big upside move and an absolute flushing takes place. We noticed that in this area, hey, we had some potential weakness come in, right? We had that weakness come in, and is this some kind of lower high at this point? You would have to say, hey, this is potentially a series of lower lows and lower highs. So at this point, we're starting to try to build a base in here, and we're going to be paying attention to this in the shorter time frames very, very closely. But if this daily is able to curl up, you would see some kind of reaction, maybe to even gap fill. But you notice the deeper we go into negative territory, the more likely it is to fail the next move, right? You have a lot of resistance to get through here. You have a lot of gap resistance to get through here, and then you have the actual gap fill above you. So we will be paying attention to this, but Nvidia is a big warning sign. Remember, Nvidia has confirmed the overall, we would say, crash signal or correction signal. It has major divergences, flat almost up, it is down on the RSI, from this point back here, back in March of 2024, we noticed that we have held those divergences all the time, but we were always looking for the divergence at the same time on the MACD, and this is where you get it. You get it right in the middle of this. We see that one more move, people get freaking liquidated, and then it just gaps down. So this is not a good thing at this point. This is saying that this downside can continue. This says that Nvidia is at serious risk of crossing over a monthly chart, and I think you need to be aware of that because Nvidia is one of the biggest stocks in the market right now, and if Nvidia starts to go down, what the heck else is going to start to go down, man? This is going to really weigh down the market if Nvidia starts to cross down on a monthly chart and see a monthly correction down to 95.63, or worst case, I think, down to around $40. So just be aware that this can get pretty serious. But right now, we're just seeing if this is going to still show itself as a base. GME, I just wanted to point out for a moment because I think this is interesting. I was also looking at the monthly data for GME, and if something surprising was going to happen, I think it's got to be February for GME. And I just wanted to discuss that with you for a second. I mean, the daily is still close to the center line. If this can whip up in February at any point, that would be a good thing. The reason that I'm talking about this and the reason we give out monthly expected moves is so you can see where that line is to see something crazy. And usually you get a range on the monthly that looks something like this. You get a pretty damn big range because there's a huge amount of implied volatility. But this month is a little bit different, and that's why I'm paying attention to it. This month, you have sub 60% implied volatility for the month for GME. That is huge. I have never seen it below 100%. So, you know, February could be an interesting month because you have a very tight monthly range. It's not going to look exactly like this. If you want it, you can join the Patreon right now. Give it a try. But if this daily would cross up and take you through that, that's exactly what you'd want to see in order for GME to catch some kind of big run. We noticed that it was trying to build basing out signals. Look like it might be going for the triple dip right now. So we'll be paying attention to it and looking at the shorter time frames. But I just wanted to state that real quick. Hey, GME, this is the first thing. You know, everyone pays attention when the implied volatility is high for GME. What if we start to pay attention when that implied volatility is low and something surprising does happen? Because you do have some reversal signals popping up in here in the shorter time frames saying that this is attempting to be a strong base in some way. And if this daily chart's able to curl up, 2-hour divergences are able to curl up, 30 minutes able to go positive and stay curled up, hey, you might see something crazy for GME. So I just wanted to point that out for a brief moment. The other thing we need to keep a serious eye on is volatility. We need to see if that's going to curl up on the daily scale. Notice that has not happened yet. It has not happened yet. So we can go into a shorter time frame real quick and just be like, well, if this 2-hour does continue to go up, but then fails, if this fails on Monday, we could start to see a base really form for the SPY. So we'll be paying attention. This daily has not curled up. Now, if this daily is curled up with a positive bar that looks strong, no big wick or something like that down, if this is just a positive bar to the upside, or maybe a continuation, right? If that continues to the upside, you have to be aware that this is crossing up. And when this does cross up, it's in positive territory. When you start to go positive, what starts to happen? This bar was negative. This bar right here was negative. This bar was positive. So we could be seeing one of those moments soon if the daily is able to go positive for volatility. But the key thing, it hasn't happened yet. These are things to still react to at this point. Now, we should have been reacting, and we're going to go over how we should have reacted in the shorter time frames. That was why we put out the warning of some warning flags showing on Thursday. But I just wanted to point out another one of those warning signs, and that would be if you see a daily cross up into positive territory for VIX, you want to be very, very cautious, trying to be like, oh, I need to go long. We're going to hit all-time highs right away. You have to see if that is able to fade. Kind of a shorter video. I mean, I do have my baby girl's birthday, so thank you guys so much for telling her happy birthday. I really appreciate that. Once again, we still have seen something bad on Friday. We need to see if that is able to continue, and if we're able to actually confirm signals that say, hey, we are going to beat this low. We are going to go down to lower levels, if not even go test the lows down from January. So we have a lot to pay attention to going into February, and it seems like we're just never going to get a break. It really seems like in 2025, confusion is still going to be the word of the year. It is very likely for us to experience, I think, a 10 to 15% correction this year, but I also think it's very likely for us to see a stock market crash. So we need to be paying attention to right now very seriously, and we will go into the shorter time frames and look at those weekly expected moves to see what we can formulate for the week ahead as far as what to pay attention to for upside, but also what to pay attention to for downside. Thank you guys so much for watching this video. I really do appreciate it. Thank you so much. And I really hope that you try out those weekly expected moves, or if you need to learn how to trade around this type of market, if 2025 stays like this for the whole year, you will need to understand where things are basing out. This means that you are about to be trading in one of the trickiest markets you have probably ever seen is going to be 2025. So if you need to learn a little bit, if you're not understanding why we were taking calls for this and selling the calls at the high, if you're not understanding calls for this selling at the high, if you're not understanding calls for this and actually holding on to those for the next weekly expected move and then selling at the high, and what we're looking for in here, if you're having a hard time with this market, that course will genuinely benefit you. And if you want to come on Monday, I'll leave it up till Monday so you can come and ask people in the chat questions who have taken the course and they can tell you how it has helped them. And if you think that lines up with you, I highly encourage giving it a try. It will help you in not only just taking a trade, but how to manage your trade in case something goes wrong like it did on Friday. So thank you so much for watching. I really do appreciate it. I hope you guys have a great weekend ahead of you. And I hope you guys have all the luck in the world with your trades in the month of February. Let's get it. Peace out.